Here is the paradox Gann lived by. The market shouts to hide the truth and whispers when it means business. The largest moves begin as quiet, measured candles that look like boredom. The loud, dramatic bars often signal exhaustion, not strength. What you call noise, professionals call camouflage. Gann anchored this in the law of vibration, the idea that time and price respond to a master clock. A single candle is not a message, it is a note. Meaning appears only when notes align in time. Prediction flatters the ego. Confirmation protects the capital. Time, not emotion, does the measuring. Your pain is familiar. FOMO at the breakout, overtrading in the chop, chasing what just moved because it felt safe. The crowd reads each candle as a verdict. The professional reads sequences, windows, and tests. Boredom is not the enemy. Impatience is. The market rewards the one who can watch without needing to act. If you seek calm over noise, stay with me. Candle psychology, the Gann way, is mechanical. Ask, has price crossed an old level and held? Did the secondary test return on reduced volume? Are pullbacks smaller than the last advance? An overbalance of strength? Does the swing chart turn up and maintain a definite, orderly rhythm? One candle can invite, only time can confirm. Think in binaries. Accumulation versus distribution. Harmony versus disharmony. Crowd impulse versus professional patience. The accumulation trap is built from familiar shapes presented in the wrong season. The antidote is rule-based observation across time windows. Mastery feels quiet. You will observe more than you trade, and your entries will arrive late by emotion, but early by law. If candles can deceive, what mechanical laws govern their true meaning? We will begin with confirmation, but one test still remains. We will decode its timing precisely. Prediction flatters the ego. Confirmation preserves capital. Gann's discipline is definite. Time must agree with price before we act. The scatter crowd treats a large candle as truth. The professional waits for proof. The proof is mechanical. First, mark the old level on a swing chart, the last pivot high that defines resistance. When price crosses that level, do not chase. Require a time window of holding above it. 2 to 3 bars on your chosen time frame, or a full session on daily scale. Time rules price. Survival through time dissolves illusion. Second, demand a secondary test. Price drifts back toward the broken level, ideally on reduced volume and narrower ranges. The test seeks harmony. Support should behave in an orderly, measured fashion. If the level holds and the close recovers above it, you have confirmation. Third, measure overbalance. Compare the largest correction of the advance with the pullback into the test. If the test is smaller in both time and price than the prior reaction, accumulation is exerting control. Rate of change must also align. Project the 1x1 and 2x1 angles from the test low. Strength keeps price above the 1x1. Angles are the market's metronome. They enforce pace. Layer time confluence. Note cycle counts, seasonal turns, even anniversary vibrations from prior highs or lows. When crossing, testing, overbalance, and time align, the signal becomes harmonic rather than hopeful. Operationally, enter near the successful test, place the stop just beneath the test low, and risk only a fixed fraction. If 2 tests fail, stand aside. Discipline is a strategy. This law resolves emotion into order. We become observers of proof. Yet one question remains. How do institutions exploit volume to feign strength and mask accumulation? In the next movement, we will read volume's quiet grammar and its deliberate lies, with time as judge. Professionals do not chase strength. They manufacture it. In accumulation, they write their intention into the tape with a quiet pen, letting volume whisper while candles perform familiar pantomimes of weakness. The crowd reads drama. They read geometry. This is the paradox. Heavy volume often accompanies distribution into optimism, while true buying hides in narrow ranges, minor down closes, and patient secondary tests. The game is rule-based. First, they map a trap zone beneath old levels where stops congregate. A deliberate drive below those levels harvests liquidity, then price springs back, but without fanfare. Volume on the spring is adequate, not explosive. The proof is delayed in time. The next decline is the testimony. If the secondary test revisits the zone on reduced volume, narrower spread, and refuses to make a new low, accumulation speaks. On a swing chart, you will see the structure tighten. Higher, minor swing lows, rallies that overbalance prior reactions, and pullbacks that remain proportionally smaller in both time and price. Overbalance is a law. When corrections lose authority, the trend beneath the noise gains it. Professionals exploit emotion by repeating false breaks into scheduled windows opens, closes, and cycle hours because routine amplifies illusion. They cross old levels to invite followers, then pause mechanically to test commitment. Confirmation is a sequence, not a spark. Cross the level, hold above through the time window, accept the secondary test with lighter volume, then observe the advance. Maintain a harmonic rate, often near a 1x1 angle. Impatience is the enemy that converts traps into losses. Boredom is their tool and your shield. The cues are definite. Ranges narrow after the spring. Closes sit near mid-bar, and the test completes within 2 to 3 bars on the traded time frame. If the test lingers and volume swells, distribution intrudes. Respect the two-fail rule. 2 failed tests, stand aside until a new cycle opens. Time, not prediction, delivers the checkmate. The market reveals truth in time, not in the instant. To detect accumulation traps, we build a simple machine. Mark, cross, hold, test, measure, align. First, mark old levels with a swing chart, letting prior highs and lows define gates that price must legitimately pass. A real campaign begins when price crosses a level and holds above it through time, 2 to 3 bars on the intraday scale, or 2 to 3 sessions on the daily. Anything less is excursion, not evidence. Next comes the secondary test, the quiet return that samples the new support. We ask for narrower ranges, reduced volume, and a brief dip that is quickly reclaimed. Then we measure overbalance. The pullback must be smaller in price and shorter in duration than the prior advance. Harmony continues with angles. The 1x1 and 2x1 act as governors of rate. Respect of the 1x1 after the test signals orderly progress. Now add time windows. Seasonal turns, 30 to 45-day counts, 60, 90, and anniversary vibrations create confluence that strengthens the case. Volume is judged in context. A spike on the cross is not enough. The test should be quiet. If volume expands on the test, trap risk rises. Execution is mechanical. Enter only on reclaim of the test high. Place the stop a fraction below the test low. Limit attempts with a 2-fail rule per zone. Scale at prior swing highs and trail beneath the last minor swing or the active angle. If price accelerates beyond the 2x1 without sufficient time confirmation, stand aside and wait for the next secondary test. The feeling of correctness becomes calm. You are not predicting. You are confirming. Method replaces excitement, and patience becomes your edge. In this engine, boredom is information, and silence often carries the decisive signature of accumulation. The paradox is simple. Fewer trades, greater freedom. Patience is not passive. It is rule-based action deferred until the market confirms. We convert waiting into a schedule. Time windows become appointments, not hopes. Before the session, you mark old levels on the swing chart, note cycle and anniversary dates, and set alerts where price, time, and vibration may reach confluence. During the session, you observe mechanically. If price crosses an old level, you require it to hold above for 2 to 3 bars, or 2 to 3 sessions on a daily frame. You wait for the secondary test, a return to the level on reduced volume, closing firm. Only then is action permitted. Risk is engineered, not felt. The stop rests beneath the test low. Size is fixed as a fraction of capital, never adjusted by mood. Take partial profits at prior swing highs. Trail beneath higher swing lows. Apply the 2-fail rule per zone. 2 failed tests, and you stand aside until the next window. Overbalance governs your trust. Reactions must remain smaller in time and price than the prior advance. If they do not, you downgrade bias. Boredom becomes your lighthouse. When emotion rises, you step back. When boredom returns, you can see. You journal confirmations and rejections with measured language. Held, failed, retested, aligned. The 1x1 and 2x1 angles serve as rate governors. If price accelerates beyond harmony without confirmation, you do nothing. In accumulation versus distribution, you refuse the illusion of urgency. You accept the market's tempo. Discipline feels quiet. The engine hums. Confirm, size, execute, review. Mind and method become one circuit. Stimulus filtered by law, action triggered by proof. With patience engineered, only one question remains. What creed will you carry into any market, in any season, to keep harmony when others chase? When method meets market, noise resolves into music. Candle psychology ceases to provoke and begins to inform, because you no longer ask the chart to predict. You require it to confirm. This is the accumulator's creed. Move only when time, price, and volume agree. Stand still when they do not. Gann's harmony is not mystical. It is mechanical empathy with the tape. You observe the crossing of old levels. You witness the holding above them through a measured window. You wait for the secondary test to speak, with reduced volume. You measure the overbalance to ensure corrections remain smaller than the advances they correct, and you check the rate of change against the 1x1 and 2x1 angles, so the trend's engine turns at a sustainable speed. When this confluence appears, you act. When one gear is missing, you study. The feeling is not excitement. It is clarity. Integration turns rules into reflex. Your entries gravitate to secondary tests at confirmed levels. Your risk lives just beneath the test low. Your scale-outs occur near prior swing highs or at angle intersections. Your reevaluation coincides with cycle anniversaries. The two-fail rule governs each zone so that capital remains orderly. You recognize accumulation versus distribution by the testimony of time. Accumulation tolerates quiet retests and smaller reactions. Distribution fails its time windows and expands on rallies with loud, exhausted volume. Volume can deceive in the moment, but time clarifies the verdict. The identity shift is the real profit. You transition from crowd emotion to professional observation, from urgency to alignment. Serenity is not passive, it is rule-based. Detachment is not indifference, it is fidelity to confirmation. Repeat the creed until it becomes posture. I do not chase, I confirm. I do not predict, I harmonize. I do not hurry, I align with time. Carry it forward and the next study becomes natural. From cycle recognition to confirmation to risk position sizing, each layer reinforcing the same law of orderly, harmonic, measured action.